Good afternoon. A few minutes late. Just wanted to call the Finance Audit Tendering and Administration Committee meeting to order Tuesday, October 31st, 2023, 4:07 p.m. Order of business called to order. And number two, declarations of conflict of interest. Are there any conflict of interest to be declared? No, thank you. Number three, approval of agenda. Can I have a so moved by Mayor Brown, seconded by Councillor McCabe? Any? All right. Number four, draft audited financial statements, 2022, 2023. Pleased to have Michelle Burge, FCPA CA Managing Partner, MRSB. Welcome, Michelle. And we'll hand it over to you to take us through the statements of the City of Charlottetown and the City of Charlottetown Water and Sewer Corporation. Floor is yours.
Sorry. Well, thank you very much for having me this evening to go through the draft audited statements. Thank you on behalf of the firm for the opportunity to be auditors again this year. And what I'll do is go through the financial statements, highlight some of these significant items. At the end of my presentation, I'll open up the floor. If anyone has any questions, I'll certainly try to answer any questions that you may have. We'll perhaps start with the Charlottetown Water and Sewer Corporation draft statements first. So in terms of looking at the Charlottetown Water and Sewer Corporation draft financial statements, so they are for the period ended March 31st, 2023. The audit report that we've attached to these financial statements are the same as they have been in previous years. So we do provide a clean opinion again this year on the Water and Sewer Corporation audited financial statements. So then we'll go to the numbers on page number 1. So this is the statement of financial position for the Charlottetown Water and Sewer Corporation, starting with the statement of financial position at March 31st, 2023, which is the fiscal year end for the corporation. And we also provide the information for the prior year for March of 2022. So the first information is the financial assets of the corporation. So at the end of March, that was about 16.8 million, down from 18.2 million in the previous year. So down approximately 1.4 million. The most significant change is, as you can see, the cash for the corporation going up, and that's mostly with the repayment of some amounts that were advanced to the city in the previous year. So those amounts have been returned and have increased to cash. And then, of course, obviously, the due from related parties has gone down with that repayment from the city. The next information for the corporation is the liabilities. So in total, the liabilities are about 41.1 million. The previous year, they were 42.4 million. A couple significant items here. So the accounts payable, the first line there, in terms of what's outstanding and owing at the end of the year, up from 1.8 million to 3.2 million. So that's an increase of about 1.4 million. The majority of that is related to capital projects outstanding at the end of the year. In terms of amounts outstanding for various projects. The timing of some of those being obviously with the Belvedere, St. Peter's Road Belvedere roundabout, some work relating to the treatment plant. So those are amounts outstanding and ongoing at the end of the year. Then the other and the real significant reason for the liabilities going down is the line that's identified as due to related party. And this is the debt of the corporation. And it's called due to related party just because all the debt is actually in the name of the city. However, there isn't a portion of some of the debt that has been taken over the years that is obviously relating to the utility. So there's no new loans that were taken out in this fiscal period. So the reduction during the year is the repayment of the existing loans during the year. So that's down from the previous year from 36.5 million down to $33.9 million. So about $4.5 million has been repaid during the year. So overall, the net debt of the corporation, it's very similar in terms of your financial assets are about $16 million. The overall liabilities at $41 million. So the net debt in terms of obviously overall debt remaining after available cash, liquid assets are applied would be about $24 million. So as I said, very similar to the position last year. And the last part of the statement of financial position is the non-financial assets. The biggest part of that obviously being the tangible capital assets or the infrastructure for the corporation. So that's gone up from 130 to 133 million at the end of March of 2023. So during the year, there was about $6 million of capital projects that were started, not all finally completed during the year. About 4 million of those are assets under construction in terms of work at the wastewater treatment plant and work at the roundabout, as well as some street rehabilitation as well. So the reason, obviously, that those assets have gone up is those capital projects during the year. So overall, the non-financial assets at about 136 million, up from 132, again, with the capital projects during the year. So overall, the accumulated surplus at 111.8 million, up from 108 million in the previous year. So that's an increase of about 3.2 million overall. So obviously, in terms of the corporation financial position, fairly stable and consistent with the previous year. So on the next page is the statement of operations. So this would be for the year ended March 2023 compared to March of 2022, giving you the revenues, expenditures, the operating surplus, and then the accumulated surplus for the year. So on page 2, so the revenues, first of all, the budget for revenues was about 14.1 million. The actual revenues were 14.26 million. The previous year, the revenues were 13.3 million. So compared to the previous year, they're up about 960,000, which is about 7% increase, and up approximately 100,000 from the original budgeted amount. So some of the significant changes, obviously the very first line is the most significant part of the revenues for the corporation, the metered sales, up from 10.7 million to 11.5 million. So there was a 5.1% increase in the rates approved in the budget. So that's obviously the reason for the significant increase there, as well, obviously, with the continued development within the city. There continues to be increases in obviously new properties and new amounts added. The fire protection city of Charlottetown, that says the budget amount at 1.2 million. And the other kind of significant item would be in terms of government grants. So they're up from 119,000 up to 211,000. So that's about 90,000 increase from 2022 to 2023. Two items of significance, or one of significance really, is probably the Fiona relief money. So that's about $190,000. So that's a reimbursement of various expenses. And there was also some money from the province for water testing, COVID water testing. So as I mentioned, overall, the revenues are up about 962,000, the majority of that obviously being in the metered sales, and that's obviously was expected in terms of the budget amount. In terms of the expenditures for the corporation, so the budget was 14.9 million. The actual expenditures were 13.3 million, and the previous year the expenditures were about 12.7 million. So they're under budget and about 630,000 more than the previous year. Again, a couple significant items here. So the debt interest charges, the budget was 1.5 million, the actual is 1.27 million, down from 1,398,000, and that's, as I mentioned, obviously about 4.5 million of debt repaid during the year, so obviously interest continues to go down. There wasn't any new debt, so there wasn't any additional charges. The Fiona expenses for the corporation were about 300,000 during the year. The Fiona relief that was received was about 192,000, so the majority of that has been covered. So the expenses here would be relating to cleanup, some equipment rental, transfer of fluid with the lift stations. So there was some costs obviously relating to all of that. The office and committee expenses up from 697,000 to 769,000, up about 172,000. The majority of that is the wage increase for staff, about $180,000 for the year. That's the inflationary increase for staff. The next significant item would be repairs from about $2.4 million to $2.7 million, but less than the budget of $3.1 million. So those are relating to additional costs and repairs during the year. Would be extra costs relating to cleaning and inspections, extra costs in terms of inventory added during the year. And then the last kind of significant item would be the wages and benefits, up from $3.7 million to $3.8 million. So they are up about $118,000. And those, of course, would be additional staff added, as well as some changes in terms of inflationary increases for staff.
Excuse me, Mr. Chair. Michelle,
Yes.
wages and benefits, what did you say it was? I have, budget was 4.2.
Yes, the budget is 4.2 and the actual is 3.8. Yep. And the previous year at 3.7. Yep. So it's up about $120,000 from the 2022 number.
But we budgeted,
Yes, the actual was budgeted at 4.2.
no, the actual is 3.8.
It's 3.8, yes, that's right, yes.
Okay.
Yeah. Yeah.
Okay, thank you.
So overall, the expenses are up approximately $634,000 in total. Again, repairs, wages, and kind of the office and committee expenses are the three key items there. So the overall result for the corporation for the year is an operating surplus of approximately $872,000, where the previous year there was an operating surplus of about $544,000, and most related, obviously, in terms of the increase in revenues, about $960,000. Expenses had increased by about $634,000.
Can I just ask another question?
Certainly.
So if we look at our expenditures, it was budgeted 14, let's say 15 million,
Yep.
and our revenue was budgeted 14.2 million?
Yes.
I thought we couldn't deficit budget.
Part of it is just kind of where we have things reflected. So one of the main items is a line right below that called the Municipal Capital Expenditure Grant. So there's $1 million that's included there as a budget amount. So you would have been identified showing as a budget of a surplus of approximately $200,000.
So we take that under other revenues, that municipal capital expenditure grant, is that what you're saying? No
Yes.
15?
Yes, yeah. So in your budget, that's considered as part of like operational.
Oh,
Yeah,
Oh.
yeah.
thank you.
So then under that category of other revenues and expenses, what's included here is the government transfers for capital, which is about $2.1 million. So that would obviously be in terms of the capital projects ongoing during the year. There was obviously capital funding received, about $1 million from gas tax funding, which was used for street rehabilitation, as well as some money from infrastructure, ISIP, about $1 million in terms of the lift stations and some work done at the wastewater treatment plant. So that's the total of the $2.1 million that was received during the year. And then the Municipal Capital Expenditure Grant, about $229,000, which is the 10% additional grant that comes from the province relating to any capital projects during the year. So overall, the other revenues are about $2.3 million, and then that results in overall an annual surplus of about $3.2 million. So it's down just slightly from the previous year of 4.6, but the previous year did have significantly extra in terms of the government transfers for capital and the Municipal Capital Expenditure Grant. That was the kind of the final amounts done in the previous year of the treatment plant upgrades for Stratford being added. So there was significant extra capital in the previous year. So really the key line to focus on is the operating surplus line, because that's obviously the number that you obviously have more direct control over. And as I said, the other revenues can obviously fluctuate a fairly significant amount year to year, and even this year you can see it in terms of what capital projects might be undertaken during the year. So the operating surplus is the key number there. And obviously it is up from the previous year. So there's been it's been a good year for the corporation again this year.
So if I could just ask, it budget 2023, note 13, deficit was 804,000. That's in brackets.
Yes,
But in the end, we came out at 872,000, right?
correct, yes.
So again, correct my math. Is that not an increase in revenue of 1.6? Like we went from a deficit.
Compared to budget, yes, yes, yeah.
Oh. You don't have them? Okay, no.
So partly relating to, obviously, increase in revenues, and then expenses were much less than obviously the budget. The biggest part is more the expenses were less than budget, yeah, yeah.
Thank you.
There is additional notes and information, but I think we've kind of covered some of those items there. If there's any other questions on that one, if not, I might move to the city. Okay? So then we'll go to the city financial statements. So you'll note that these financial statements are referred to as consolidated financial statements. So just wanted to clarify in terms of what that means. So it obviously includes the city, the corporation, Water and Sewer Corporation. It does include Kerry. It does include the Eastlink Center at 85%. And we have an amount reflected here as well for CADC, 15% of the profits. So when we're reflecting numbers here, we're obviously including not only just the Water and Sewer Corporation and the city, but there is other entities that are obviously consolidated. And obviously because of the relationship that the city has, particularly with Eastlink and Kerry. So the first item I'll probably refer you to is just a couple pages in, called the Independent Auditor's Report. And I will kind of go through this one. I skipped over the other one. So this is where we obviously provide our opinion. So it's a couple pages in. This is where we provide our opinion on the financial statement. So it's issued to the mayor and the members of council. So under the opinion that says that we've audited the consolidated financial statements of the city of Charlottetown, which comprise the consolidated statement of financial position at March 31st, 2023, and the consolidated statements of operations, changes in net debt and cash flow for the year then ended, and notes to the consolidated financial statements, including a summary of significant accounting policies. So in our opinion, the accompanying consolidated financial statements present fairly in all material respects the financial position of the city of Charlottetown at March 31st, 2023, and the results of its operations and its cash flows for the year then ended, in accordance with the Canadian accounting standards for the public sector. So as I mentioned on the previous Water and Sewer Corporation, this would be the exact same opinion that we're providing. So we provide a clean bill of health, what we call the standard auditor's report again this year on the consolidated financial statements. The remainder of the report would be exactly the same as it has been in previous years as well, in terms of outlining roles and responsibilities for management and the auditor. So then we'll start with the numbers, again, the consolidated statement of financial position on page 1. So this is at March 31st, 2023, and we also provide the information for March of 2022. So again, just clarifying, because they are consolidated financial statements, this does include the city, Water and Sewer Corporation, Kerry, Eastlink. So this wouldn't obviously coincide with some of the numbers that you may have seen in internal financial statements. So the first information being the financial assets. So those are assets which are considered to be liquid assets, cash or near cash. So at the end of March of 2023, that's about 23.7 million. The previous year, that's about 30.8 million, so it's down about 7 million. You can see the very first line there, the main decrease is obviously the cash. So the previous year, about 18 million in all accounts at the end of March. This year, we'll see in a second, there is kind of an overall combined overdraft, and that's obviously with most of the significant amount of capital projects, almost 50 million during the year. There was obviously operating loans that were used to make sure that all of the payments were up to date. It's been after the year end that obviously those term loans have been initiated. The other kind of significant items here under financial assets, so the Capital grants receivable at 11.5 million, up from 5.2 million in the previous year. Again, this would be relating to capital projects, but one of the most significant items there is 7 million outstanding in terms of Fiona. So that's outstanding with the province at the end of March. The other significant portion would be related to the municipal capital expenditure grant. So that's about 3.5 million at the end of March. There would also be some smaller amounts from ISIP, ACOA, but those are the most significant ones there. You'll see a line called the Investment in Government Business Enterprise. So that's up from just about 1.7 million to 1.8. So this is how we reflect the CADC. So that's your 15% of kind of the equity or earnings of that corporation over the years. As you can see, that's gone up about 160,000 this year, and that's your 15% of their profits generated for the year. And then the loans receivable, the last item in financial assets there, that's the SWITCH program. SWITCH, yeah. So at the end of March, that's about 4.4 million. So that's 323 loans that are outstanding at that point. At the end of the previous year, it was only 36 loans. So obviously a significant uptake in the program in the last fiscal year. So those are all the loans outstanding at that point in time. So there's a couple items, as I mentioned, cash down, loans and receivables are up, but overall financial assets or liquid assets are down about 7.1 million. The next information in terms of the liabilities, so they're up from 135 million up to 152 million in total, so about 17 million overall. The first line there, as I mentioned, the bank indebtedness, just a change, as I said, in terms of at the end of the year, when all accounts are considered, there would be fairly significant amount of overdraft at the end of the year, again, requiring those funds for kind of capital projects, and then after the end of the year, those were termed out. The accounts payable then, the next line up from 19 million to 39 million. The majority of that is obviously, again, related to capital projects. So at the end of the year, that's about 16 million outstanding in terms of the various projects outstanding, holdbacks outstanding on those projects. Also as well, too, of course, includes the about 3.5 million owing to the province for property taxes overpaid. So that and the capital projects is the main increase during the year. The deferred revenue, the 13.4 million, so about 5 million of that is from CMHC. That was money that was received before the end of the year for the Rapid Housing Initiative for 21 affordable housing units. Then there's about 4.4 million is relating to the gas tax funds that you have still available to carry forward. And there would be some deferred revenue for Kerry and Eastlink as well in there. The sick and post-employment and benefits for all staff, that's about 6.4 million, and that's based on actuarial reports estimated in terms of those obligations at the end of the year. And then finally, of course, the most significant liability is the long-term debt. And this, again, would be the city and the Water and Sewer Corporation combined together. There's one small loan with Kerry. It's only about 40,000. So overall, the debt of the city is at 91.4 million. Down from 95.8 million in the previous year. There was one additional loan added for the city, and that relates to the Federation of Canadian Municipalities for the SWITCH program. So that was about 3.1 million added. And then during the year, obviously then the remainder in terms of how much was repaid in debt during the year has obviously reduced the balance down. So there was about 7.6 million repaid in total. So overall, as I mentioned, the liabilities are 152 million, up from 135 million last year. Again, a lot to do with the capital project bills outstanding. So your financial assets are 23 million. The total liabilities are 152 million. So the net debt of the city is at 128.3 million, up from 104.6 in the previous year. Again, a lot to do with timing of capital projects. Then the last item here is the non-financial assets. So the first line there is the largest portion, which is the tangible capital assets or the infrastructure, again, within all city entities. Now at up from 300 million up to 338 million. So there was about 50 million in total of capital projects during the year. As we just noted on the water and sewer, that was about 6 million. So about 44 million on the city. Which is about 20 million still under construction with Public Works building, Simmons Arena, about 8 million on road infrastructure, about 4 million on buildings, and about 4 million on Beach Grove culvert. So those are probably the 5 or 6 main projects during the year. The inventory of supplies would be Public Works and inventory for the Water and Sewer Corporation. So that's up slightly. And one item of kind of difference this year is the intangible assets, the very last item in the non-financial, and that's the cost to date in terms of the official plan. So that's about $377,000. So in total, the non-financial assets at $342 million, and overall the accumulated surplus now at $214.4 million, up from $198.4 million in the previous year. So we'll see in a minute that overall the annual surplus increase is about $16.7 million. Again, a lot of that related again to capital projects. All right, so then we'll go to the next page, the consolidated statement of operations. So again, consolidating all of the entities within the city. So first of all, the revenues, the budget was $78.4 million. The actual revenues for 2023 are $96.5 million, and the actual for the previous year at $78.1 million. So the revenues are about $18 million more than budget, and approximately $18 million more than the previous year to the end of March of 2022. So the very first line, of course, being the most significant item is the property taxes. So the budget was $40.1 million, the actual at $44.1. So there obviously was not an increase approved in terms of the tax rate. So that all relates to obviously new development, new property within the city. And you also benefit as well every year just from the inflationary increases on the assessed values from the province. So that's up about $6 million from last year. Of course, this does not include the extra payment that you receive from the province, so that's all in accounts payable in terms of that will obviously have to be repaid. That's not, unfortunately, your revenues. The government transfers for operations, the next line, up about $8 million, and that all relates to the Fiona funding that would have been received. So that's about $7 million. And the other remaining and larger portion, of course, would be the municipal grant, which is at $16 million. The water and sewer, up about $1 million, as we just noted on the previous statements for the corporation. Recreation up from $4.5 million to $5.6 million, so that's about $1 million increase. So that's about $500,000 increase in Cary, about $500,000 at the East Link, and then the city is pretty much the same, a slight increase there. The police protective services, those are very similar to last year, but a little bit higher than the budget amount. The licenses, the next line, the budget was about $1.1 million, the actual at about a little over $2 million. So that's obviously the increase in building permits. So building permits issued during the year, revenues generated were about $1.85 million. The previous year at about $1.1 million, so that's increased about $735,000. The tourism accommodation levy, so the total revenues collected about $1.6 million from $737,000 in the previous year, so up about $950,000, and that obviously would coincide with obviously increase in tourism with the previous year still impacted by COVID. The other significant item here is a line identified as miscellaneous. So for 2023, that's about $1.5 million. The previous year at $613,000. The biggest component of that is from Dine Holdings, their satisfaction of the development agreement for parking. So that is about $940,000 additional revenues. As well included here is just some insurance proceeds as well as workers' comp rebates during the year, but certainly the development agreement amount is the most significant portion of that. And the net income from CADC, as I mentioned, is about $160,000, your 15% of the profit for the year. And then the interest and other, so there obviously was significant more interest earned on amounts held in the banks during the year, so that's up about $160,000. So in total, revenues up about $18 million, with property taxes being about $6 million, the Fiona funding about $8 million, and then a couple other categories up about $1 million each. In terms of the next section of expenditures.
Can I just, Michelle?
Sure, certainly.
Mr. Chair? So, Michelle, under government transfers for operations,
Yes.
it went from 16 to 24. Did you say that was for Fiona?
Fiona is 7 million, yeah.
Yeah, but I see Fiona's down here in expenses at 8.
Yeah, so we have both the revenue coming from the province for the claim, the Fiona claim submitted, and then we also then show the total costs as well. So
Okay, and just for clarification, property taxes, that's both the grant and taxes collected, right?
it's not, the municipal grant is under the operations at 16 million.
I think it's like a equity, transfer, Betty, what's the term that we use for that?
It's municipal support.
Yeah.
Yeah, that's, yeah,
That's included in
that
the
16 million is in, no, the property taxes is only the property tax amount.
Oh.
The municipal grant is under the government transfers for operations.
Okay, thank you.
So the next information in terms of the expenditures, so the budget, again, on a consolidated basis, initially was 85 million. The actual expenditures for the year at 92.7 million, so about 8 million more than budget. The previous year, the expenditures were 74.4 million, so about 18 million higher than the previous year. So again, a couple significant areas here. So the amortization up about 1.1 million from 10.5 million to 11.6 and higher than budget. And that's again because of significant capital projects during the year. We have a separate line here for Fiona expenses at about 8.4 million. So those are kind of all expenses relating to cleanup. It doesn't include wage related. Those are under kind of the other categories. So those, again, would be arborists, tree cleanup, all expenses kind of relating to Fiona at about 8.4 million. As I mentioned, in revenues is a little over 7 million in terms of the claims submitted to the province. So not quite all, but the majority certainly of those expenses have been covered. The general government, so the actual expenses this year are about 7.7 million. The previous year at about 6.7 million, so they're up about 900,000. And that, of course, includes salaries and other costs. Salaries being up about 300,000. Other costs, including election, would be an item that would have been reflected here, as well as some costs relating to professional-related fees that are included here as well. As well as the strategic plan and governance that was completed.
Excuse me, Michelle,
Certainly.
just on the Fiona thing, just so.
Sorry, yep.
The broad numbers, am I right? Maybe you're looking at this saying the Fiona expense was 8.4, round numbers, and we received 7 million,
Correct, yes.
basically?
Yes.
Okay.
The next item probably just to refer you to is the Parks and Recreation. So the previous year was about 7.8 million, and it's up to about 9.2 million, so it's up about 1.3 million in total. And again, of course, this does include Cary and Eastlink. So their salaries were up about 500,000 from the previous year. And then as well, just even the city-related Parks and Recreation salaries also would be up during the year as well, too. So that's the majority of the increase is obviously salary-related. Protective services, right below that, up from 13.2 million in the previous year to 15.8 million. So that's up about 2.5 million. So in terms of the major items here, so the fire department salaries would be 3 million of that total. Police department salaries would be about 10.5 million in that total, and then other kind of related expenses for both the fire and the police department. So salaries are up about 2.4 million in total. Police department being up about 2 million, so that's additional staff, extra time on Fiona, relating to Fiona, and any inflationary increases. Right below that then is the street maintenance and environment, up from 12.6 million up to 14.8, so up about 2.2 million. So again, here would be an area where there'd be significant extra costs relating to Fiona in terms of salaries, up about 2 million, and that has a lot to do with just keeping on seasonal staff extra, longer hours in terms of cleanup. The tourism accommodation levy, just a couple lines down, that would obviously increase as well, as you noticed above, in terms of the revenues. So obviously in terms of additional amounts that were paid out to the other kind of organizations and obviously for other projects. So that's up about $1 million. And then water and sewer, as we just saw, up about $500,000 in total in terms of expenses. So in total for the year, as I mentioned, the budget was about $85 million. The actual expenses at about $92 million. Obviously, the Fiona is really the significant item there that was obviously an unbudgeted, unexpected expense. So that's the reason that the actual numbers are higher. The previous year at the $74.4 million, again, with Fiona being the biggest part of that. And obviously in terms of salary increases and extra costs related to Fiona in staffing as well. So those are kind of the significant items there. So overall, the result for the city on a consolidated basis, again, initially, there had been anticipated to be an operating deficit. Now, this obviously does include Kerry and Eastlink, that they were budgeting deficits for the year. So that is obviously not where you initially had said you can't budget for a deficit. So that's including their deficits, which are reflected here. And so the overall result for the year for the consolidated basis is an operating surplus of about $3.7 million, where the previous year about $3.6 million. So in that total of $3.7 million, it's approximately the city about $2 million of that surplus. As we just saw, the Water and Sewer Corporation about $800,000, and then there is profits of about $175,000 for Eastlink, but there is a small loss for Kerry. So that's kind of how that 3.7 is kind of coming together there. So you're very consistent. Oh, sorry.
Michelle, again, I just, maybe I misheard. So the 3.7 million surplus, that includes the 800 from the,
Yes.
it does?
Yes. Yeah.
So actually, we're looking at 2 point.
Around $2 million would be the city part of it. Yes.
Okay.
Yeah. Yep.
And on the expenditure side, so the deficit from both, did you say Kerry and Eastlink?
Yes.
Were they at about 500,000 to combined?
Oh, no, they're more than that. I believe even Eastlink, one of them was estimating a deficit to be over $1 million.
Okay, yes, I think that was Eastlink. And do you remember what Kerry was?
It was about 400,000, I think.
Oh.
It was almost 2 million, I think, in total.
Okay.
Yeah, yeah.
So 400,000 for Kerry deficit and 1 million for Eastlink.
Yes, yeah.
And nothing on the garages, parking garage, it's just, those are the two.
Right, right. Yeah, because the parking garages would all be kind of included in your budget amount.
Million for Eastlink and close to $500,000 for.
I believe so. Yeah, I can clarify
for
those.
Kerry.
Yeah.
Thank you.
Yep. So when you compare to kind of the previous year, overall, the operating surplus is fairly consistent. It is slightly higher than previous year, but still obviously a positive number overall. And again, as I said, that's the line to focus on in terms of the operating surplus.
Yeah.
And as I mentioned, the city component of that would be approximately $2 million of that $3.7 million. The other revenues then for the year, so the first line there being the government transfers for capital at about $10.3 million, fairly consistent with the balance last year. So the gas tax would be about $8.4 million of that. ISIP about $1.5 million. There also would be money from ACOA, active transportation as well. So overall, consistent kind of in the total between the 2 years. The municipal capital expenditure grant will be about $4 million between the Water and Sewer Corporation and the city. And the majority of that was still outstanding at the end of March, but has been submitted certainly and I believe received by now. The gain on disposal of tangible capital assets, the $74,000 was a few smaller items in terms of some older vehicles, equipment that were sold during the year. The previous year would have been the sale of the parking lot to Rods, so that was about $1 million gain in the previous year. The next line in terms of the pension expense, so obviously with the Water and Sewer Corporation and the city, those staff that are under the pension plan, we do have an actuarial report to identify what is the current service cost during the year. So that's about $1.2 million, up from $868,000 in the previous year. And obviously, as we noted during many of the lines of expenses, wages being up is obviously that correlates to that. The sick and post-employment benefits, so there is 555,000. This is identified as a revenue for the year. Change overall in terms of what is the overall estimated benefit for the city for all employees that, again, under sick and post-retirement. And then there's a pension valuation allowance of about 792,000 identified in terms of the city portion of the pension expense for the year. So in the total of this area, the other revenues are about just about 13 million, from 11.8 in the previous year. So it's about about $1.1 million increase. And so this is added to the operating surplus to have the overall result of an annual surplus of about 16.7 million. And again, that's obviously increasing the overall annual surplus for the year because there was a lot of capital projects. And what will happen over time is obviously, when, a lot of the projects are completed, what will start to happen is there will be a larger amount of amortization. So that will obviously have an impact on surplus going forward, and that will reduce surplus. As you can see, this year even, the amortization was about 1.4 million over kind of what was budgeted. So that will continue to be a very significant number based on the major capital projects over the next number of years. So now the accumulated surplus of the city is about 214 million. But again, the majority of that would be what we would call already invested back into the municipality in terms of the, in the city in terms of the investment in the tangible assets at already about 133 million of that total. So.
And Michelle, can I just go back to pension expense? No,
Certainly.
Note 9. So we also make a pension contribution to the Civic Center, the Eastlink Center's RRSP expense, correct?
Yes.
And as you can see there, Mr. Chair, we also make a RRSP contribution to the Capital Area Recreation, Inc. employees.
Yes.
Okay.
Yeah.
So this year it's about 75,000 for the Bell Alliance Center and 16,000 for Eastlink.
Correct.
Okay.
Yes.
Michelle,
Yes.
could I just ask a question?
Certainly.
When I was going through this yesterday, the accumulated surplus at the bottom, note 18, 214,407,946.
Yeah.
Correct? And then it says note 18, and then when I go to note 18,
Yeah, your copy doesn't agree. I noticed that after I was looking at it on the weekend, so we have to update that. It's supposed to be the 214 million in total.
there's just a typo there?
Yes, it's something we do have to update, yes.
Okay.
Yeah.
Thank you.
The only probably other item I might refer you to is probably on page number 20 of the financial statements. I think it's page number 29 in your document. Just in terms of the overall debt of the city, as I mentioned, it is down overall from 95.8 million down to 91.4 million. So they're obviously, and this would be, again, the Water and Sewer Corporation and the city debt all combined together. And as I mentioned, there was only one addition during the year, so it's close to the bottom there, but it's the Federation of Canadian Municipalities, so that's for the SWITCH program. So that's now at 4.1 million from 902,000 in the previous year. The payments don't start until actually 2026 of repayment of that. And they will go until 2043 in terms of the overall commitment for that. And this, of course, would only be reflected to the end of March of 2023. I know even in May, there was additional amounts that were advanced.
Excuse me. So are you saying page 20, the total 2023 91,485 includes sewer and water as well?
Yes, it does. Yes. Yeah. So the sewer and water, I think, was, the debts of that were about 33 million. And this is 91 in total.
Okay. Thank you.
So, Michelle, I'm looking at page 29 and going through this is the TD that we signed back in When was that, Steve? Was that 219? Yeah. So it says 31 million outstanding on that debt, so we drew that, like, is that still in Betty or Stephen? Is that still cash? Has that been spent? That's all spent? And now we're going out for another loan, which will be in the 24-25 audit statements, correct? 23-24. Sorry, 23-24, thank you. Okay. Okay. So, Michelle, I always look at, I think, under the MGA, or I think it's under the Act, under financial,
Yeah,
in terms of what we can borrow.
yes.
I think you've looked at our property tax or assessments, and if we look at assessments, I'm just looking through I think our assessments for 2023 were up to about $1 billion. Is that right, or more than that?
Yeah,
So we're allowed to borrow up to 10%.
10%, yes, yeah.
Yeah, 2 billion for residential, 2.1 apartments, hotels, mobile homes. And then, do we also add the commercial on the top of that? So it would be
Yeah,
up
I think
to
it's the
3 billion?
total, yes, yeah.
Oh.
Yeah.
So our debt, our long-term debt is pretty.
Oh, yes, yeah,
safe
you're
and
certainly
secure.
well within the MGA amounts in terms of what you're allowed to borrow.
We're
yeah.
not redlining it.
No,
It's-
no.
okay. Mr. Chair, can I just go back to the revenue, consolidated revenue? This may be where I'm getting it wrong. I'm looking at the, okay, where is it?
Page 2?
Page 2, yeah.
Two, yeah. Yeah, no, just one second. Yeah, is it 7?
Or page 11. I'm
We're
talking-
on the digital.
Page 11, I think it is.
On digital?
Yes,
Yeah. I'm just looking at our budget document. So it says property taxes. We budgeted 2023, 40 million,
Yep.
144. And then provincial grants. So the provincial grant, would that be in the government transfers?
yes, it is.
So
Yeah, yeah, the 16 million.
16 million.
Yes,
Yeah.
yes.
And under expenditures, Betty, did we list the 3.2 for the money or the overpayment in our expenditures last year? I think we did we not? The whole amount?
The amount, the overpayment?
Yeah.
No, it is reduced from the revenue.
So the revenue of the 44.1 million in property taxes, that reflects the amount that you're entitled to, the kind of final settled amount.
So the 3 million's in there?
The 3 million is not included there. So the 44.1 million is the city's portion that you will be able to keep. The 3 million that you have to repay, that's what we had reflected in accounts payable. So it's not included here anywhere in terms of your
Is that on
operations.
page 2?
So in page 1, under the accounts payable and accrued liabilities, the 39.1
Okay.
million.
The 3's in there?
Yes, it is.
Yeah, it's already.
Yes,
yeah.
it's basically already reflected as a debt to repay.
And the letter that we received from taxation, it's 24 month, now it's 27 months, is it? It's up,
No, it's 24 months, but it starts 3 months later.
okay. Yeah, but we had the whole amount in liability.
Yes,
Okay.
yes. Yeah, so the only amount reflected in property taxes is, as I mentioned, only the portion that the city is obviously entitled to keep, yeah.
Okay. Well, Mr. Chair, looks like a good budget. Audited statements. Sure, the management letter will be in good shape, too.
Not a budget, statements, but yeah, no. And are you near complete?
Yes, yep, yep,
Okay.
yep.
Michelle?
There is other things, but I think everything is fairly straightforward there, so I don't know if there's anything else.
So, just so I'm clear, I guess, so the combined net debt of the city today for, the city is what?
So on page 1 or page 10 in the digital document, the net debt of the city on a consolidated basis is 128.3 million.
128.
Right, that's what I have, 123, and then
128.
128, and then I got water. I
The
got
water would be
24,
included in that.
262.
Yeah, so the
For
water
a
would.
total of 152.
No, so the water is already included in that number because we have this reflected as.
Okay, so the 24 is included in the 128.
Correct. Yes, yeah. So,
That's
yeah,
even
if you were to determine what is the city.
Good, Johnny.
That's great. I thought, okay.
Yeah, so it's
good
about
news.
104
Happy
million.
Halloween.
We
Yeah,
can borrow
104
more
million
money.
is obviously the city portion of net debt, and then the 24 is for the Water and Sewer Corporation.
Right, Betty, we can borrow more money if we need it.
I'm just wondering, are there any comments, questions to Betty from any of the staff? Betty, Steve, CAO, everybody's good?
Looks good for the CAO.
Looks good. All right. All right. With that, I'll ask for motion for adjournment. So moved by Councillor McKay, seconded by Mayor Brown. Pardon me? You said-
Yeah.
A motion to send these to council for approval.
Moved.
Okay, so motion to move the statements, consolidate financial statements of the city and Charlottetown Water and Sewer to council. So moved by Mayor Brown, seconded by Councillor McKay. Thank you, and thank you, Betty, for
Motion to adjourn.
helping me in my job here.
Motion to adjourn.
All right, motion to adjourn. So moved, Mayor Brown, seconded by Councillor McKay. Thank you.
Thank you, sir.
Good.
Thank you.
3 minutes to spare, Julie.